Okay, there was some disturbance with the internet connection. Now only it got resolved. Okay, so we will proceed with the remaining questions. And I was dictating the note for question number 1, sub question 1. So I told you in this present case, both division G as well as division R are benefited. But out of division G and division R, which is more benefited? That is a question which can be computed, or that is something which can be computed only if you have the figures for computing that. But unfortunately, that is not there in the question. So when you answer this particular question, what you can say is that both G as well as R, they are benefited out of this internal transfer, because as far as G is concerned, G is able to transfer the goods at full cost. So that full cost includes a portion towards the fixed overhead also. So if not for this internal transfer, G would not have been able to recover that portion of its fixed cost in with respect to this 20% of the sale. So G is benefited. Now what is the benefit for R? As far as R is concerned, if not for this internal transfer, if they were purchasing from the external vendors or outside vendors, they should have paid full cost plus markup. But here the transfer price is set at a price which is equal to the full cost only. There is no markup. Okay, so to that extent, the cost that R pays G is lower. So both the divisions are benefited out of it. Okay, so you can continue. On the other hand, R need to pay only the full cost as the price of the product, as no markup is charged for internal transfer. For internal transfer, division R is able to get this product at a transfer price lower than the market rate. Okay, so this is the explanation for the sub question, the first sub question. Okay, now second one, what do they say in second one? Market price, the G transfers are at transfer price equal to the market price. G's level of production is 80 and external demand is 60. Okay, so external demand is 60 plus 20 for internal transfer. G is producing 80% and he is selling at what rate? Market rate. So who is benefited here? G is benefited. Why G is benefited? Because in the internal transfer, G is able to get full cost and also profit. Okay, whereas as far as R is concerned, they are not benefited due to internal transfer, because they are getting the product at the same transfer price which is equal to the market price. Okay, so if not for this internal transfer, R would have purchased this product from the market at the same rate itself. So there is no benefit for division R, but division G is benefited because they are getting more profit. Okay, so in this case, division G is benefited. Okay, so in this case, division G is benefited. Oh, it is clear. Yeah. And division R is not benefited. Okay, why is it so? the internal transfer is priced at par with the market price. Hence, division G is able to recover variable cost, then fixed overhead component, and a markup for profit. Okay, thus the internal transfer is beneficial to G. Okay, on the other hand, what happened to division R? Division R is indifferent because it is getting this product at the same rate as it is available in the market. So either purchase it from G or you go and get it from the market. On the other hand, division R is getting the product at the same rate it is available in the market. Hence it is not benefited due to what? Due to internal transfer. Is it clear? Okay, now next, which is the next scenario, third one. It is transferred at marginal cost. Yes, it is transferred at marginal cost. External demand is there, then external demand is up to 80%, then 20% for internal demand, so 100% production capacity. So the transfer price is set at marginal cost. Now if the transfer price is set at marginal cost, what about G? Is G benefited out of it? No, G is not benefited. Why G is not benefited? Because when G produces this 20,000 units for internal transfer, he is incurring the marginal cost only, and he is selling these products at that marginal cost itself. So there is no benefit for G. Is it clear? Because how much ever additional cost they are incurring, that only they are recovering, no additional profit, or there is no amount for recovering the fixed cost. Is it clear? So G is not benefited. But what about R? R, if not for this internal transfer, R should have purchased this product from the external market. And if it is purchased from external market, they will have to pay for marginal cost or variable cost, then fixed overhead portion, and also a profit markup. Okay, so the price which they ought to have paid in the external market would have been much higher. Is it clear? Whereas here, in case of this internal transfer, they are getting that same product at marginal cost alone. So they are benefited. Okay, so you can write. In this case, division R is benefited out of internal transfer. Okay, how can you say that? As far as division G is concerned, is considered, G is concerned, the transfer price is set at par with the marginal cost. Hence, it does not earn any margin over and above the incremental cost. Thus, this transfer is not beneficial to G. On the other hand, division R is getting the product at a very cheap transfer price when compared with the market rate. Hence it is advantageous to division R. Okay, now fourth one. What is fourth one? They transfer at 100%, transfer at market price. Now 90% is external demand and G's production level is 100%. Okay, can you say that who is benefited? See, what is happening here? External demand for G is 90%. Okay, now internal demand is 20%, but you can't have 110%. How much can you have? You can have a production capacity of only 100. So if internal transfer is resorted, what will happen to that 10%? That 10% will be reduced from this 90%. So by resorting internal transfer, G is losing 10% of the external market share. Okay, external market share. So whenever there is loss of external market share, what will be the effect of that? There will be loss of contribution. There will be loss of contribution from that 10% of sales lost. But in this case, the transfer price is set at par with the market rate. So that 10% of external market demand lost is being compensated by what? Is compensated by the internal transfer. Not only that, when you resort internal transfer, you are getting additional 10% sales. Okay, because total requirement for internal transfer is 20%. So 10% you are losing from external market share. But here, as far as the internal transfer is concerned, you are getting 20% additional. So net effect 10% benefit is there for division G. Okay, and for that additional 10%, they are getting which rate? Market rate. So that will increase their profitability. Yes. And what about division R? Is there any difference for a division R? No. Whether they are going for internal transfer or external purchase, they will have to pay the market rate. Same thing only, they have paid for internal transfer also. So division G is benefited to the extent of 10% of additional demand due to internal demand and pricing at market rate, whereas division R is indifferent. Okay, so you can write, in this case, division G losses 10% of external demand to serve the internal demand. Okay, however there is no opportunity cost. To division G, as the internal transfer is also priced at market rate. or market rate. Is it clear? Also, by accepting internal transfer, G will receive additional 10% order at the market rate. Thus, it is advantageous to division G. Okay. However, division R is indifferent as the price is quoted at the market rate. That we have already written. Okay. So, this is the conclusion. Okay. One by one we have taken, and for all the 4 scenarios we have written. Now, moving to the next question, we will have to take question number 2. Take question number 2. You can read the question. Please read the question. Okay, we will read the question once again. What is given? B Limited makes 3 products X, Y and Z in divisions X, Y and Z respectively. The following information is given. So, there is a company. What is the name of the company? B Limited. And B Limited is having how many divisions? There are 3 divisions. Okay. division X, then division Y, and division Z. Okay, then the following information is given. Direct material. Here there is a catch. Excluding material X for division Y and Z means what? It means that division Y and Z require what? The X. Who produces X? X is produced by division Y, division X. So the X produced by division X is required for both division Y and division Z respectively. That is what it means. So there is an internal transfer. Okay, then going ahead, direct labor per unit is available, then variable overhead per unit is available, selling price to outside customers. Yes, so all these three products, that is X, Y and Z, can be sold in the external market. Okay, external market, and this is also in the external market. Plus what? Division X can be sold to the product X can be sold to division Y as well as division Z. That is what you have to infer. Now existing capacity is given 6,000, 3,000, 3,000. Now maximum external demand in number of units, it is 5,000, 5,500 and 5,000. Maximum external market demand. Okay, additional fixed cost that would be incurred to install additional capacity. Yes, if you want to increase the capacity, you can increase the capacity. How you can increase? By incurring some additional fixed cost, and that amount is directly given. Next, maximum additional units that can be produced by additional capacity. It is 6,000, 2,000 and 2,250. Okay, now what is the requirement? Y and Z need material X as their input. That is what we saw, right? Because material X is required by both Y as well as Z. Material X is available in the market at 23 per unit. So that is the market price. Okay, so X is available in the external market at rupees 23 per unit. Now defectives can be returned to suppliers at their cost. Division X supplies the material free from defects and hence able to sell at 25 per unit. Okay, so what happens is X can sell, selling price at rupees 25 per unit. Okay, to whom? Division X, whereas the same product is available at rupees 23 per unit in different different suppliers. Okay, now each unit of Y and Z require 1 unit of X as input with slight modification. If Y purchases from outside at 23 per unit, it has to incur rupees 3 per unit as modification and inspection cost. If Y purchases from division X, it has to incur, in addition to the transfer price, rupees 2 per unit to modify it. Yes. Then going ahead, if Z gets the material from division X, it can use it after incurring a modification cost of rupees 1 per unit. If Z buys material X from outside, it has to either inspect or modify it, inspect and modify it at its own shop floor at rupees 5 per unit, or use the labor, idle labor from division X at rupees 3 per unit. Division X will lend its idle labor as per Z's requirement, even if Z purchases the materials from outside. Yes. Now the transfer prices are at the discretion of the divisional managers and will remain confidential. Assume no restriction on quantities on interdivisional transfers or purchase. Discuss with relevant figures the best strategy for each division for the company as a whole. Very important problem. Okay, very important problem. Now what is happening here? Till this you have understood. There are 3 divisions, X, Y and Z, and all these divisions X, Y and Z, they produce product X, product Y and product Z respectively, and all these 3 products can be sold in the external market. In addition to that, the product X manufactured by division X can be or is required by both division Y and division Z respectively. Okay, now there is capacity constraints. the existing capacity for X is only 6,000, 3,000 and 3,000. X, Y and Z, they are 6,000, 3,000 and 3,000. But you can increase the capacity by how much unit? In case of X, you can increase it by another 6,000. Okay, and in case of Y, you can increase it by another 2,000, and Z, you can increase it by another 2,250. But if you want to increase, there is some additional fixed cost to be incurred. Is it clear? Now, in the case of Y and Z, division Y and Z, they require, both Y and Z require what? Material X for the purpose of completing their products. But they have got two options. Either they can procure it from division Z, division X, or they can get it from the external vendors. Okay, now if they get it from the external vendors, then each product they receive from the external vendors have to be inspected, and if required, it has to be modified. Okay, and if it is inspected and if you are finding out some defectives, you can simply send it. You don't incur any cost for the defectives. Okay, but there is a cost for inspecting the material received from the outside vendors. There is a cost for that. But in the case of the purchases from division X, if division Y and Z they purchase from division X, then division X will be supplying it free of defects. So there is no inspection required. Only modifications to suit to their products is required. Okay, and the options are available here. Now, as far as division Y and Z is concerned, they need material X. Okay, we have read that. Material X is available in the market at rupees 23 per unit. Defectives can be returned to suppliers at their cost. Division X supplies the material free from defects, and hence it is able to sell at 25 per unit. Each unit of Y and Z require 1 unit of excess input with slight modification. Yes. Now, if Y purchases from outside at 23 per unit, it has to incur 3 rupees per unit as modification and inspection cost. So net will be rupees 23 plus 3, so rupees 26. On the other hand, if Y purchases it from X, it has to incur, in addition to the transfer price, rupees 2 per unit to modify. So it will be rupees 25 plus 2, 27. Is it clear? Right. Now, in the next case, if Z gets material from division X, it can use it after incurring a modification cost of rupees 1. So 25 plus 1, that is 26. Then if Z buys material X from outside, it has to either inspect and modify it at its own cost at its own shop floor at rupees 5 per unit. So that means 25 plus 5, 23 plus 5, that is 28. Or use the idle labor from division X at rupees 3 per unit, or 23 plus 3, that is 26. And division X will lend its idle labor as per Z's requirement, even if Z purchases the material from outside. Now, the transfer prices are at the discretion of the divisional manager. Means divisional managers can decide either it has to purchase from the internal division or from outside, and will remain confidential. Assume no restrictions on the quantities of interdivisional transfers or purchases. Discuss with relevant figures the best strategy for each division and for the company as a whole. Yes, it's a good question. Okay, now we will start solving it. What you have to do? You have to first find out what is the contribution per unit, right? You have various information given, so the starting point has to be the contribution per unit. Okay, so you can write statement of contribution per unit. You have various permutation and combinations here, right? Okay, so what you can do here is you have division X, division Y, and division Z. Okay, now division X is concerned. Division X has got how many options? It has got basically 3 types of transactions. Am I right? What are they? They can either sell to outside. Sell to outside, or what you can do, transfer to division Y or transfer to division Z. Okay, now as far as division Y is concerned, it also has two options. One is purchase from out, okay, then transfer from division X, and for division Z also either purchase from X or transfer from purchase from outside or transfer from X. Okay, so okay, right. Now what's given here? Selling price per unit. Selling price per unit or transfer price per unit. If it is selling to outside, what would be the rate? 25. Okay, now if they are selling it to division Y, then what would be the rate? We will come to that. Okay, and with respect to division Z, what would be the rate? That also we will come to that. And for the time being I am keeping it blank. Okay, now if they are in case of division Y, purchase from outside, what would be the selling price? The selling price is given, the rate at which they are selling the products. What is it? Selling price 65 and 90. So here it will be 65. Here also, even the as far as division Y is concerned, this is only a component. Okay, which is only a component. The product X is only a component. So the finished goods of division Y, whether it is sold to external or whether the component is purchased from external vendors or component is purchased from division X, the output will have same selling price only. So both case it will be 65 itself. Here also it will be either 90 or 90. Okay, now less material cost. Okay, material cost. What is the material cost here? 8, 22, 40. So 8, here also 8, 8, 22, 22, 40. This is excluding X component. Okay, now direct labor. What is the rate? Direct labor 468. 4, 4, 4, 6, 6, 8, 8. Okay, now that is direct labor. Now variable overhead, that is also given 2 2 2, all cases it is 2 itself. So okay, now what else? Purchase price of X. Okay, that has to be considered. It will be there. Here it is not applicable, not applicable. Here also not applicable. Here not applicable, and here also not applicable. It will come here as well as here. We will come to that later. Then there is some modification cost. What is modification cost? Modification cost is the cost incurred for converting the material X purchased from either from outside or from X for the purpose of for inspecting or whatever. And they say that in case of division Y, if they are purchasing from outside, how much cost will be incurred? It is 3. Okay, whether on the other hand, if it is purchasing from X, it will incur 2 rupees. Okay, so here I am writing it as in issue. Okay, no, it's okay. Right, so modification cost in case of division Y, if it is purchased from outside, modification plus inspection cost plus inspection cost, this will be 3 rupees here, then here it will be 2 rupees. And they say in case of Z, if it is purchased from outside, it is only 1 rupee. Okay, and sorry, if it is purchased from X, it has to incur only 1 rupee. Purchased from X, it is only 1 rupee. Now if it is purchased from outside, okay, here there is one calculation. So we will start with this end. You can write here working note number A. Okay, leave some space and okay, so option or computation of inspection and modification cost for division Z. Okay, now as far as division Z is concerned, it has got 3 options. Okay, so division Z has 3 options. Option 1, purchase X from division X plus incur modification cost at rupees 1 per unit. Am I right? This is at rupees 1 per unit. Or purchase X from outside plus inspect or modify at rupees 5 per unit. So the inspection and modification have to be done at Z's floor itself, and the cost will be 5 per unit. And the third option is purchase X from outside plus inspect or modify using labor of which party? Labor of division X. Okay, and they say that division X will lend its idle labor as per Z's requirement even if Z purchases the material from outside. What is the cost? The cost will be rupees 3 per unit. So at rupees 3 per unit. Okay, now tell me, out of these three options, this is an option to be considered, whether it is to be purchased from X or not, division X or not. That is okay. That we will evaluate later. Now suppose if division Z is deciding to purchase X from outside, it has got two options. Okay, either inspect at its own floor by incurring a price of rupees 5 per unit, or you rent the labor from division X and pay rupees 3 per unit. Out of these two, which one will be selected? There is no doubt in that they will go for this only, rupees 3 only. Is it clear? So you can write it will not be opted. It will not be opted. What will happen if it is opting this? Because it will have to pay rupees 5 per unit. In on the other hand, if they hire the laborer which is available even if the product is purchased from external market, it is available. So you need to pay only rupees 3. Am I right? So that means you will have to spend how much? 3 rupees only. So the option of that 5 rupee, that is not there. Is it clear to everyone? Yes. Right. So that's done. Now the next is contribution. But before computing the contribution, you will have to complete certain things. Purchase price of X have to be written. So here is the next column to be filled, the transfer price. Okay, so you can write computation of transfer price. Okay, is there any information with respect to the transfer price that division X is going to charge from division Y and division Z? Please go through the question. Is there any such information? Division respectively, the following information is given. Okay, material cost, that is given. Labor, variable overhead, selling price to outside customers. X is selling this component X or product X in the external market at 25. It does not mean that they are going to charge 25 itself. Is it mentioned anywhere? No, it is not mentioned. Okay, nowhere it is mentioned that they are going to sell it at 25 itself. Now here there is an information which says that Y and Z need material X as their input. Material X is available in the market at rupees 23 per unit. That is the substitute, cost or substitute. Now defects can be returned to suppliers at their cost. Division X supplies the material free from defects and hence it is able to sell at 25 per unit. To whom? In the external market only. They are not talking about internal transfer. Each unit of Y and Z require 1 unit of X as input with slight modification. Okay, so is there any information with respect to the transfer price to be charged? No, nothing is given. Okay, now if you come to here division Z, division Y, division Y, they say that division Y has got two options. Option 1, what is option 1? Option 1 is to purchase from external vendor. What? Purchase X from external vendor. What will be the cost? 23 rupees plus how much cost it will incur after purchasing? It will incur 3 rupees. So what will be the total cost per unit? It will be 26 per unit. Okay, now what is the second option? Option 2. Option 2 will be to purchase from X, division X. Now listen, if you want to induce Y to purchase the product from division X, then the total cost has to be equal to 26 alone. Am I right? It has to be 26. If the total cost is 27, will they purchase from division X? No, they will not purchase. If it is to be purchased from division X, if both these options have to be indifferent, then the total cost has to be 26 itself. If total cost has to be 26, then what has to be the transfer price? They say that if Y purchases from division X, it has to incur, in addition to the transfer price, rupees 2 per unit to modify it. So anyway, rupees 2 is required for the modification. So the transfer price will become 24. Is it clear? This is very crucial point which you have to keep in mind. Okay, so computation of transfer price. So you can write, in case of division Y. Division Y has two options. Okay, option 1 is equal to, what is option 1? Purchase X from outside vendors. Okay, cost per unit is equal to purchase cost plus inspection cost. That is equal to, purchase cost plus inspection cost will be rupees 23 plus 3, that is equal to rupees 26 per unit. Okay, now you can write option 2, purchase from division X. Okay, so under that, if division Y should purchase X from division X, the total cost under both the options should be same. Okay, therefore the maximum TP that can be charged from division Y is equal to what? Total cost of option 1 minus additional cost to be incurred in option 2. Am I right? Is this concept clear to everyone? If this is clear, then this question is very simple. Okay, so that will become, total cost of option 1 is rupees 26. And what is the additional cost to be incurred in option 2? In option 2, the additional cost to be incurred is how much? Rupees 2 per unit. Okay, so minus rupees 2, that will give you rupees 24 per unit. Okay, I had shown you the calculation why this becomes 24. Keep in mind. Okay, so the maximum TP will be 24 per unit. Okay, that is what you have to write here. So here it is 24, and also there is purchase price here. Purchase price here will be 24. Now what do you have to do? Division Z. Okay, as far as division Z is concerned, now Z has got two options. Option 1, what is option 1? Purchase X from whom? Division from outside vendors. From outside vendors. And we saw that if they are purchasing X from outside vendors, will they inspect it their own using their own labor, or will they hire the labor from division X? They will obviously hire the laborers from division X only. So purchase X from outside vendors and hire laborers of division X. What will be the cost? The cost will be rupees 23. Okay, 23 plus rupees 3. Okay, what will be? This is equal to rupees 26 per unit. Is it clear? So this 3 is the inspection cost payable. Now there is option 2. What is option 2? Option 2 is to purchase X from division X. Okay, what is given here? If Z gets material X from X, material from division X, it can use it after incurring a modification cost of rupees 1 per unit. Okay, so what will happen here? Purchase X from division X. Maximum transfer price payable. What is the maximum transfer price payable? Maximum transfer price payable will be what? Total cost in option 1. In option 1 minus additional cost in option 2. That will be, what is total cost in option 1? It is 26. 26 minus what is additional cost that will be incurred if material X is purchased from division X? It is rupees 1. So rupees 25 per unit. Okay, so transfer price in case of division X, division Z will be 25 per unit. Okay, so you can write here, it will be 25, and here also it will be 25. Okay, so you can compute the contribution per unit here. Okay, 25 minus 8 minus 4 minus 2, that is 11. So here it is 11 per unit. 24 minus 8 minus 4 minus 2, this is 10 per unit. Then 25 minus 8 minus 4 minus 2, this is 11 here. Then in this case 65 minus 22 minus 6 minus 2 minus 3, 32. Here we have okay, here purchase cost is considered, is not considered. Purchase price or transfer price, here if they are purchasing X from outside, you will have to consider the purchase cost, which we forgot to consider. So here also it should be 23, here also it should be 23. Okay, so 23 plus 3 here also, so that will be 32 minus 23. So 9, and here it will be 65 minus 22 minus 6 minus 2 minus 24 minus 2. Here also it will be 9. Okay, and in this case it is 90 minus 40 minus 8 minus 2 minus 23 minus 3. Here it is 14, and here 90 minus 40 minus 8 minus 2 minus 25 minus 1. Here also 14. Okay, so this is the contribution per unit. Okay, now what you have to do? Now you have to take a decision whether it should be internally transferred or not. Okay, so you can write the next working note: decision making for internal transfer. We have products X, Y, then Z. Okay, now existing capacity. Existing capacity. What is the existing capacity? It is 6,000 here, then 3,000 here, and 3,000, right? Okay, and if you want, you can increase the capacity. So additional capacity that can be added. Okay, they say that you can add up to 6,000. Okay, here you can add up to 2,000. Here you can add up to 2,500, 2,250, 2,250. So total capacity available, here it is 12,000, 5,000, and here 5,250, 5,250. Okay, now what you have to do? If you see the contribution per unit for product X, the contribution per unit is highest in the case of selling outside, as well as product transfer to division Z. Okay, here it is 11, and here is 11, and here it is 10. So from the division X perspective, it can either sell the goods to outside, or it can sell it to division Z at 11, yielding a contribution of 11. And after that only they will think of transferring the component X to division Y because it yields a contribution of rupees 10 only. So what do you have to do? The total capacity available, this one, less external demand. Always first preference should be given to external demand. Why preference is given to external demand? Here they have autonomy. They can decide whether they should sell to external demand, external customers, or internal transfer. Okay, now though in case of division X, both transfer to division Z and external sales give same contribution per unit. In case of transfer to division Z, it is subject to the decision of division Z also. So there is an ambiguity. Okay, but in the case of external demand, it is pakka confirmed. They can sell. So what they will do? They will first sell or first appropriate entire maximum external demand. So that is 5,000. Same with Y also. They have to first meet the external demand. And here it is 5,000. So surplus demand, here it is 7,000, and here nil, and here 250. Okay, now what you have to do? You have to see how this surplus demand has to be appropriated. Okay, surplus demand here, transfer to division Z should be given first. And division Z, how many units they require? 5000 units they require. Okay, 5000 is required. So balance how much? Balance transfer to division Y. This will be balance 2000. What is the requirement of division Y? Division Y require maximum of 5000, but only how much will be available? 2000 will be available. Balance 2000 it should have to produce. Okay, so here this is transfer to division, is that? So I am writing it as summary. I am making a summary. Okay, transfer out, okay, to division Z 5000, to division Y 2000. Then transfer in means receipt from other divisions. Here how many you are getting? 2000 you are getting from X. Here you are getting 5000 from X. So that is the plan. Now what you have to do? You have to take a decision with respect to whether the capacity should be increased or not. Okay. Decision with respect to capacity addition. Okay, how to take that capacity addition? You have to compare the additional cost of cost on expansion as well as what you have to compute the contribution, additional contribution that can be earned by expansion. You compare these two and see what is the net benefit. Okay, so here you have 3 X, Y and Z. Okay, now additional fixed cost for expansion. What is the fixed cost for expansion? They say that 45,000, 9,000 and 23,000. 45,000, 9,000 and 23,100. 23,100. And can you tell me if additional capacity is added, the pattern of sales, then only you can compute what? The contribution per unit. Am I right? Okay, so what will be the pattern of sales? Pattern of sales in case of X, what is the existing capacity? Only 6,000. So out of this 6,000 will be used for what? Out of the 6,000, 5,000 will be used for external demand, and balance 1,000 will be used for what? Meeting the demand of division Z. Okay, so if there is any additional capacity addition out of the 600, okay, Z require 5,000 total. 5,000. So 4,000 will be for Z and 2,000 will be for what? Y. Okay, so pattern of sale to division Z, how much? 4,000. Okay, to division Y, 2,000. And in the case of Y, what is the existing capacity? Existing capacity is 3,000. Okay, how much you can add? You can add 2,000. And what will you do with that? You have an external demand of 5,500. So this entire 2,000 will be used for meeting the external demand. So external demand of 2,000. If you come to Z, what is the additional existing demand? It is 3,000. Existing capacity is 3,000. What is the existing external demand? It is only 5,000. Now you can add up to 2,250, but out of this 2,250, only 2,000 can be applied for external demand. Balance 250 will be waste. So here also external demand is equal to 2000. Therefore additional contribution on capacity addition. Okay, how do you find out that? 4000 units are sold to Z. Okay, and what is the contribution you are getting? 11 rupees per unit. And next, 2000 rupees, 2000 units you are selling to Y, and what contribution per unit you are getting? 10. So into 10, so total will be 4000 into 11 plus 20,000, that will be 64,000 rupees. 64,000. Here it will be 2000 into external sales. What is the contribution per unit? Contribution per unit external sales, it is 9 and here it is 14. So 200 into 9, so that will be 18,000, and here 2000 into 14, so this will be 28,000. So what is the decision? What is the additional cost? Or let us take it as one more column, net benefit or cost. In the first case, your cost is 45,000 but benefit is 64,000. So what is your net benefit? Net benefit is 64 minus 45, that is 19,000. Okay, similarly here 9,000 is additional fixed cost, 18,000 is your benefit. So here net benefit of 9,000, and here 23,100 compared with 28,000, so the net benefit will be 4,900. So decision will be here expand, here also expand, and here also you can expand. That is the decision. Okay, now what you have to do? You will have to go for the solution. What is the solution? They are the question they are asking. Discuss with relevant figures best strategy for each division and for the company as a whole. Okay, so you have to find out what is the best strategy. So statement of profitability. How do you find out the statement of profitability? In statement of profitability, if you see, as far as division X is concerned, there is no confusion. You have to go for all these three options. Now the only confusion is with respect to Y and Z. Which one should be selected? Out of these two, which one should be selected? Now if in case of division Y, if they purchase the component from outside, they will get a contribution per unit of rupees 9 per unit. On the other hand, if they transfer it from division X, then the transfer price have to be fixed at 24 and they will get a benefit net contribution of 9 rupees. So out of this, they will be indifferent to both the options. Okay, provided transfer price is set at 24. Okay, so if they are indifferent, they will opt for what? They will opt for this one. And out of division Z, if they purchase from outside vendors, what is the contribution? It is 14. If they purchase from X, what is the contribution? 14. Provided the purchase price or the transfer price is 25 per unit. Okay, so among this also, which one will be selected? 14 will be selected. Is it clear? Okay, so now what you have to do? You have to find out the statement of profitability. Okay, you have to write division X, division Y, division Z. Okay, strategy external sales, or we will make it as division X external sales transfer to Y transfer to Z. Okay, then here what should be the strategy? External sales, what is the total quantity available? We have computed this here. External demand is 5,000. So 5,000, then 5,000, then 2,000. Okay, in the case of division Y, only 2,000. Okay, now in case of division Y, total sales, what is the total sales? Total sales is how much? 5,000. Total capacity is available 5,000. So here it will be 5,000. Okay, now as X purchase from division X, how much we can purchase? We will get only 2,000. Okay, then what you can do? X purchased from outside. Okay, see, in case of division Y, you will give only 2,000. Division X will give only 2,000 quantities. So balance 3,000. What division Y will do? Division Y will purchase from external market. So 3,000, because both the options are indifferent. Okay, then in the case of division Z, total sales will be how much? Total sales will be 5,000. Okay, 5,000, and entire quantity will be purchased from division X itself. Okay, now statement of profitability, X, Y, Z. This is the best strategy. Now X, Y and Z. Okay, now under X you have external, then you have transfer to X, transfer to Y, and transfer to Y, transfer to Z. Then here you have only external sales, here also external sales. Okay, this is there is internal purchase, but sales in case of Y and Z, it is only external sales. So number of units sold. External, here it is how much? 5,000. Then here to Y it is, no, here some mistake, just got reversed. In Y 2,000 and Z it is 5,000. So here it is 2,000 and here it is 5,000. External Y, how much? 5,000. Here also 5,000. Now contribution per unit, here it is 11 per unit, here it is 10 per unit, and here it is 11 per unit, and in the 9 and 14 respectively. So here it should be 9 and here it should be 14. So total contribution, total contribution will be how much? 5,000 into 11, 55,000. Okay, then 2,000 into 10 will be 20,000. Then 5,000 into 11 will be 55,000, and 5,000 into 9 will be 45,000. and 5,000 into 14 will be 70,000. Okay, now that is the total calculations. Now what you have to do, you have one more information here. What is that? Apart from the, do you have any information regarding the fixed cost? Any information regarding the fixed cost? No, there is no information regarding the fixed cost. Only you have the additional fixed cost that is required to install the additional capacity. So you compute that. Okay, less additional fixed overhead. What is the additional fixed overhead? Here it is. The total will be how much? 55,000 plus 20,000 plus 55,000, 1,30,000. Okay, so here 45,000 net, then 9,000 net, and 23,100 net. So net revenue, okay, 1,30,000 minus 45,000, so 85,000. Then 45,000 minus 9,000, 36,000. 70,000 minus 23,100, it is 46,900. Okay, net revenue. Okay, you can write an assumption. You don't have any information regarding the regular fixed cost, so you can write, in the absence of information regarding regular fixed cost, comma, the same is not considered. Same is not considered. Okay, so the best strategy to be followed is what is we have given here. This is the best strategy. Okay, right. Question number 3 we have already done. Then what we have, 4, 5, 6, right? Okay, 6 is a case study, full-fledged case study. Okay, so regarding the next class, we were not able to do the yesterday's class due to some technical issues at my end. So actually after this topic, what is left out is 2 chapters. One is standard costing, and there is one chapter number 8, that is performance evaluation, performance measurement methods. That is a full-fledged chapter in chapter 8, which is purely a theory oriented paper, but of course you may get case studies on that. So that is left out. And also we have chapter number 12, standard costing. Now standard costing I want to take in the regular session itself, so I need 1 day for that, and also there may be 1 or 2 questions from this particular topic. Okay, and chapter number 8, what I will do, I will give you the recorded version of that. I will send it through YouTube links, which you can hear and which you can learn at your convenience, because that is something purely theory topic of course some models we are explaining, but it doesn't have any practical implication. So even if I am keeping on explaining you in this model, that is not going to benefit you. So what I thought, I have recorded most of the portions. I will complete the balance also, and I will share you those lectures which you can use for your revision as well as for learning purposes. And after this, what is left out is case study and also solving the exam questions. Okay, now from the exam questions, I told you those who are appearing for this November attempt, I will be having separate sessions on solving the question papers. I will contact you each and every one, and I will get the details of whoever is attempting in this coming November. And after that, I will schedule the sessions, say 3 or 4 hour sessions in one sessions every week, so that the benefit will be you will be able to do the questions with me, solve the questions with me as you are in the exam hall. Okay, so we will do the the solution part together. Okay, that is with respect to the exam part. And regarding the case study, there are a lot of case studies which are there in the separate chapter in the institute material. I want to solve each and every case study which I will be doing as recorded lectures, and I will be sharing you. You can go through, because case study requires a lot of time to sit and understand the situation scenarios. So even if I take it in the class, it will be very difficult for you to follow. So what I propose is, you take your own time. I will share you the manner in which the case studies have to be attempted, and also the solution part like we are doing in the class. So you can take your own time for reading the question. You can read 1 or 2 times, pause it, and hear what I am explaining. Then in that manner you can do each and every case study. That will be more helpful. So even the case study part also, including those which are there in the RTP, I will send you the links of the recorded sessions. Okay, and one more thing which I would like to ask you, I am to hear doubts from you guys, because now the problem with this class is I don't want to my plan was to open the class based on the queries I am getting from you. I am open to it, but I should get the queries from you before I have any separate sessions on query clarification. So only very few have asked any doubts on these topics. So I request you all to go through the lectures, whatever we have covered till now, and wherever you have any doubts, please note down those doubts and please send it to me either in my WhatsApp or in Telegram or as a message. I will go through those doubts, and wherever there are some small doubts, I will clarify then and there itself. And if I feel that those are doubts which I have missed out in the class, or I need to explain you again, then probably I will have separate sessions for that. I propose to have separate sessions for that. But before that, I need to know if you have any doubts at all. Okay, but I have not, very few only among you have asked any doubts to me. So I request you all to go through these topics and come out with your doubts. And preferably you should be asking the doubts when in the coming weeks itself, because the problem is, if it is too much extended after the class, it will be very difficult for me to follow whatever I have taken in the class also. Okay, so if you ask a doubt all of a sudden, and your doubt may be after hearing in the class, so I will have to rehear the class, that particular portion, which may be a bit difficult. So what I want, please ask the questions or queries in the coming weeks itself. Okay, now what we will do, so that is the overall plan. So we will have a 1 full day class in the coming week. With that, I will conclude the regular class, and the balance topics, the recorded versions, I will send you in YouTube. That is the plan. Okay, now going forward, we have to do one more problem. So you can take question number 4. Basically, this behavioral consequences are, it's only theory questions where you have to give the suggestions from your part. So we will just read the question and see how it has to be answered. So take question number 4.